So recently, Miguel asked in the Discord group, what would be a good price to buy for dollar cost averaging Main Street Capital, ticker symbol MAIN, and Altria Group, ticker symbol MO, in your opinion? Well, that's a great question. Those are both two very high yielding dividend stocks, and today we'll be diving into both of them. So without further ado, let's get into it. All right, my friends, what is going on? It's so great to see you guys. My name is Ryan Williams, and here I show you how to reach financial freedom, or at least take steps closer to it, by investing in dividend stocks, like the two high yielders we're going to be talking about today, Altria Group and Main Street Capital. Now, I actually own both of these dividend stocks in my portfolio that I've been working on building for the last 2 years, and as you guys can see, it's currently valued at $36,390.44. And going over to this screen right here, we can see that I'm up nearly 10% in this portfolio, which is pretty solid, and at least a chunk of that gain is coming from both of these stocks. I mean, starting with Altria Group, I have just over 44 shares of this company, and I'm up nearly 23.5% so far with this position, which is pretty nice. Now, real quick, for those of you who have never heard of Altria Group, maybe don't know what they do, this is a company that's been around for a long time, and they manufacture cigarettes and other tobacco products, and they own popular brands that I'm sure you've heard of, even if you're not a consumer of the products, like Marlboro, Copenhagen, and Black & Mild. And although these products are not the most positive products to sell or consume, it is a great dividend paying company, and I actually haven't been buying this stock for quite some time. It looks like, according to this right here, the last time I bought any shares or invested any of my own money into these shares outside of like the dividends being reinvested was maybe back in January, where I picked up a couple shares, and this 0.75 right there, I think that's from a dividend reinvestment, but I haven't bought any shares of this company for some time, and part of that is because it's run up so much. But anyway, we'll talk more about that later. Getting into my Main Street Capital position, once again, for those of you who are not familiar with this company, which I'm sure some of you guys have not heard of Main Street Capital, they are a business development company, or a BDC, and what they do is they loan money out or invest in other businesses who need funding in an attempt to help them grow and realize their full potential, as it says on their website right here, or to get back on their feet if for some reason they are financially distressed. And as far as my position goes, I have nearly 30 shares of Main Street Capital, and I'm up nearly 8%, which is great, considering this company isn't really known for its capital appreciation or its share price growth, which is something we'll talk about more later as well. And just like with Altria Group, I haven't bought any shares of Main Street Capital for some time. Going over here, you guys can see there's a lot of transactions coming from this stock right here. Every month there's shares being purchased, but this is only from dividends being reinvested. Every single month, this company pays a dividend, which is one of the things a lot of people like about Main Street Capital. And just based on the position size I have, every single dividend reinvestment is granting me, somewhere over a tenth of a share, which I think is pretty nice. And although I haven't been swooping up any more shares of Altria Group or Main Street Capital for some time, that's not to say that they're outside of buying range. In fact, I think Altria Group is still looking pretty good and is actually looking like a pretty decent buy right now. As we can see here, going over to Seeking Alpha, in the last year, they're up about 2.5%. And before we go any further, you can see that there's been kind of a run up in price on that price chart there since November. So this company has recently gotten more expensive. In the last 6 months, they're up 15%. In the last 30 days, they're actually down just a little bit. But in the last 6 months, that's really what we want to focus on, that jump right there. And if we expand this, we can see that that puts Altria Group near its 52-week high. But even with this run up in share price, guys, it's still not looking too bad. And for goodness sake, the PE ratio is just barely touching double digits. And if we scroll up and go over to the valuation page, we can take a closer look at this. So the PE ratio right now is about 42.5% lower than the sector median. So compared to a lot of the other stocks in the consumer staples sector, which would be companies like Procter & Gamble, Pepsi, Coca-Cola, Philip Morris, Altria Group is still looking a lot cheaper than some of these companies. And it's even looking cheaper compared to its 5-year average. So the 5-year PE of Altria Group is about 13, and right now it's about 17.25% lower than that, which is great. And scrolling down, they don't have a price to book measured, which we'll see here. No price to book measured, but the price to cash flow is not looking too bad either. 10.9, which is about 20% lower than the sector median, and is about 17.6% lower than this company's 5-year average price to cash flow. So across the board, compared to other stocks in the sector and compared to itself on a 5-year average, Altria Group is looking to be at a discount. And on top of that, this company has some really strong dividend stats to match. Now, we can see here, guys, I mean, you guys already know it's a high yielder. It's sitting at nearly 7%, a near 7% dividend yield with actually a pretty high payout ratio, which could be concerning for a lot of people, but but Altria Group and companies in this industry that sell tobacco products, from my understanding, they like to not keep a lot of cash on their balance sheets. They like to push it out to shareholders. But moving on, not only does this stock have a high dividend yield, it's also got a pretty respectable 5-year growth rate of 8.25% and also a very nice dividend growth history. Seeking Alpha has it at 14 years here, but I do believe that Altria Group is a dividend king. And if we scroll up going over to the dividend history right here, we can see that they've been paying their dividend for 52 consecutive years, which I could be wrong. I could be missing something, but I think that they've been growing the dividend for that same amount of time. I don't know why Seeking Alpha has it at only 14 years. But anyway, guys, as far as dividend stats goes, Altria is a triple threat. It's got the high yield, okay? It's got the high growth, and it also has the long growth history, which is equally as important as those other two metrics, in my opinion. Now, this begs the question, guys. I mean, is Altria Group a good buy right now? Would I buy Altria Group right now at its current price of $52.40? And I would say, yeah, I would personally still contribute to it at this price, although it's up quite a bit in my portfolio. The price is really not too bad. I'd probably consider it in buying range under about $60 per share, especially if you're dollar cost averaging into it over a period of weeks or months. Really anything above $60 per share, and then Altria Group starts to get above its 5-year PE based on its current earnings per share level. Hopefully that makes sense. And moving on to the next stock and getting into Main Street Capital, guys. This is a little bit of a different story, and I believe I mentioned this earlier, but Main Street Capital, guys, it's not known for its share price growth. It's not known to be a stock that's really going to jump up in share price. And if we zoom out here, looking at this 10-year chart, we can see this to be true. For the most part, there's really not any aggressive spikes or dips save for what happened in 2020, but that happened to a lot of stocks, and it's since recovered from that. But since then, guys, it's really trading pretty flat and seems to stay within a range of about 37 to about $44, $45 per share. And expanding the key data here, we can see that Main Street Capital is like right smack dab in the middle of its 52-week range. It's not too expensive. It's not too cheap. It's like right in the middle. Okay, it's fair. And I would talk about the PE ratio, but for a company like this, that's probably not the best metric to use. We'd probably want to look at the price to book. Now, going over to the valuation page and finding that here, the forward price to book for Main Street Capital is 1.66, which in its own right is really not too terrible, but compared to the sector median, it is quite a bit more expensive. It's 46% higher than the sector median price to book, which is not working in Main Street Capital's favor. And just expanding on the price to book a little bit more, one of the useful metrics that we refer to with business development companies or BDCs like this is what is called the tangible book value per share, which is kind of a mouthful, but we also refer to it as the net asset value or the NAV. And essentially what this is the total value of the company's tangible assets per share of the company. And ideally, we'd like to see this increasing over time, which is something that we do see here with Main Street Capital. So going over to the financials page, jumping over to the balance sheet, this is where you'll find it, at least on Seeking Alpha. We can scroll down and find this tangible book value per share. It's right here. We also see the tangible book value, not per share, but the value in total. And this is definitely going up over time, very consistent. So that's great to see. This means that the company's tangible assets are growing at a faster rate than its liabilities, which is awesome. But per share, guys, this is a little bit more flat. Okay, 2020 wasn't the best year for tangible book value per share. We'll give them a pass for obvious reasons, but otherwise, it's going up slowly but surely, and it would be going up a lot quicker if the total shares outstanding wasn't increasing, which for normal companies, we would not like to see this, but for business development companies and real estate investment trusts, I do believe this is less concerning because oftentimes these companies will issue more shares out and make them available for purchase, and they use this to fund their investments. Now, moving on, let's go up and take a look at some of this company's dividend stats. Now, going over to the dividend scorecard page and scrolling down, Main Street Capital has a very nice yield, just like with Altria Group, 6.05% yield, which is very sweet. Their payout ratio is 93.75%, but companies like this pay out a lot of their earnings to shareholders. Same thing with REITs. Real estate investment trusts have to pay 90% of their income out to us as shareholders in the form of dividends, which is one of the reasons we often see higher dividend yields from real estate investment trusts. The same concept is true here with business development companies. So the high payout ratio is not as concerning as it would be if we were looking like at a Procter & Gamble or at a Coca-Cola, something like that. Now, the 5-year growth rate with this company is not great. 1.62%, very poor growth. And they also have a dividend growth history of 0 years, which is not great either. And scrolling up, guys, although they have 0 years of growth, they do have, what is that? when it loads. 14 years of consecutive dividend payments, which is good. It's good to see at least a little bit of consistency in that realm. And all of this leads to answering the big question, which is this a good stock to buy right now at its current price of $42.46? And I actually don't think it's a terrible buy today. I mean, like we saw, it's right smack dab in the middle of its 52-week range. But if it was me personally, I maybe would like to see a little bit higher of a margin of safety and would feel more comfortable investing under $40 per share for sure, maybe somewhere under $39 or even $38 per share, maybe between like 38 and 40. Somewhere in there, I'd feel much more comfortable investing in this company. But that's not to say it's a bad buy today. Remember that. And either way, guys, I wouldn't expect much share price appreciation from Main Street Capital. I also wouldn't expect much dividend growth in the future. If you're going to be investing in Main Street Capital, do so with the realization that this is primarily an income play. You're buying in this company today to generate passive income. You're not looking for dividend growth. You're not looking for share price growth. This is pretty much strictly an income play. And because of this, guys, I like to keep a lower allocation of this company in my portfolio. I don't think it makes up more than 2 or 3% of my overall portfolio. The yield sure is nice though, and I'll tell you guys what, if you were to have started investing in both of these companies a handful of years ago, you would be sitting on some pretty nice dividend income right now. And to expand on that a little bit more, I actually put both of these stocks through a back test, made a little sample portfolio, and if you were to have invested $1,000 into these stocks back in 2015 and invested $100 every single month into a portfolio comprised of these two, you would have gone from $1,000, which was your initial investment, to just over $15,000 in the last 7 years. Additionally, your dividend income would be really nice too. Just from these two stocks, you'd be generating $838 in dividend income just in 2021, in the most recent year. And I'll tell you what, if you kept that going for a longer period of time, not just 7 years, but 10, 15, 20 years, the amount of dividend income you'd be receiving is pretty unreal from these two high-yielding dividend stocks. Anyway, that is my take on these two high-yield dividend stocks that I love investing in. And if you guys are hungry for some more dividend stock content, then check out this video right up over here. And if you want to see more videos from me in the future, I'm putting out 2 every single week. Hit that subscribe button right over here. I'd love to have you follow me along on my investing journey. Anyway, thank you guys so much for watching. I really appreciate it. I hope you all have a fantastic day, and I will see you in the next one.